Good morning, traders. My name is Christopher Vecchio, currency strategist with Daily FX. Today is Wednesday, February 10th, 2016. These are your FX headlines as we turn the page to North America. And of course, today the focus is on Janet Yellen's Humphrey Hawkins testimony in front of the House Financial Services Committee. Chair Yellen is expected to at least try to clarify Fed communication, which has become increasingly opaque over the last few weeks. Markets, of course, are taking issue with the fact that the Fed is projecting 4 rate hikes this year, whereas right now markets are going back and forth between 0 and 1 rate hikes being priced in. Last Wednesday, when the markets officially priced out rate hikes this year, we saw that the dollar index had its worst single-day performance in history outside of the 1998 or 2008 crisis periods in FX markets, of course, around the Asian crises, long-term capital management year period, and then the 2008-2009 global financial crisis. So that was not exactly an encouraging sign for the greenback. And as we stand today, the Fed needs to step up here and exhibit some sort of confidence or reassuring sentiment that they're going to be able to continue along their projected policy path, or at least continue to normalize rates irrespective of what's going on in short-term financial market developments. And we say this because the US dollar index is at a very important technical level here. We did just make the exit outside of this expanding wedge at the top. Of course, turns are the most violent, and so volatility here in this pattern, it was not really a surprise. The fact that it led to a turn here, the false breakout back into the flag, now into those December swing lows, 12,035. We're seeing this coincide with the uptrend from the May, August, and October 2015 lows. So needless to say, this is a very, very significant level of support. 3 big patterns that have kind of all coalesced in one area. And right now, this is an instrument that's taking on a more bearish momentum profile. As we saw from January 4th to January 26th, the bullish profile was indicated by price holding above the daily 8 EMA on a closing basis, MACD moving above its signal line and trending higher, stochastics trending higher through 50 and into overbought territory. Now, since we had seen that close below the daily 8 EMA on the 26th of January, price now holding below its daily 8 EMA, stochastics and MACD trending lower below their respective signal or median lines, price respecting the daily 8 EMA as resistance on the most recent retest on Monday. So if we do get that close down below 12,035, be increasingly concerned about a greater dollar sell-off. Looking to 11,850 would be very possible. When we look at euro dollar here, you see at 112.68, increasingly up in that zone where the ECB may take issue with the euro. In fact, today we already had a rumor that the ECB may be ready to buy bank stocks as part of a pseudo underhanded bank recapitalization plan. Overall right now, with Italian FTSE MIB up 5%, peripheral yields down precipitously, you can see where the market is positioning itself. It's desperate for more liquidity, starved for liquidity at this point in time. But as we expressed in our weekly trading forecast for the euro this past week, we say that the euro rally may run into a little bit of a wall over the coming days and coming weeks as this exchange rate becomes more of an issue. As of last week, the differential between the spot rate and the ECB's technical assumption for 2016 was 2.81%. That jumped over 3.5% as of yesterday. Why is that an issue? Well, when the ECB was pre-announcing its deposit rate cut in October, euro dollar had closed as high as 3.37% above the ECB's technical assumption for 2015 at the time, which was 111. So we're very much in the territory where the ECB may start to take issue with the euro exchange rate. We should be mindful of that. On a day like today, where the Fed has an opportunity to come out and reassure markets that it's not making a mistake, that indeed these short-term financial developments may or may not have a substantive impact on medium-term economic developments, and therefore the Fed is, still far too early in the game to decide whether or not it actually wants to adjust its projected path. Dollar index has a chance of finding some support here. Otherwise, if the Fed says or does something today, Yellen says or does something today that provokes a sell-off here, it really would be damning, in my opinion, for what would be coming up over the next few weeks for the greenback. Yellen is the last line of defense, kind of like how NFPs are the big line of defense on the data side. Yellen is the last line of defense on the policy side. And if she's going to be questioning the Fed's outlook, more or less adorning the market's belief that no rate hikes this year may be appropriate, then the dollar could go into a bigger swell of things. As it were, dollar yen still very much keeping this in our focus, head and shoulders pattern potentially playing out, looking for a move closer to 106 if this is true. BOJ looks like it's increasingly losing control over their economy. Nikkei down another, see, was it 2.32% last night. Elsewhere, as we're seeing this kind of risk-on mindset take hold, as it looks like the ECB is willing to get directly into banks, seeing that gold is coming off a little bit here, right into former resistance levels, finding a bit of a pause, worth keeping an eye on. Dollar CAD likewise, seeing that with oil moving up today, it too is starting to turn a little bit lower. And you know what? Very similar pattern here in the technicals as we saw in the US dollar index. What we saw from November 4th until January 22nd, price holding above the daily 8 and 21 EMAs, daily 8 EMA for most of the time, but daily 21 EMA on a closing basis. Stochastics and MACD trending higher through respective signal or median lines into their overbought or elevated territory. And then what happens on January 22nd, we get a close below the daily 21 for the first time since November 3rd. Indicators start to trend lower. Now we're in bearish territory. Price starts to treat the moving averages as resistance, and sure enough, we're starting to spill lower here. Canadian dollar may be at a policy turning point. We've been talking about this for a little while now, for about 2 weeks, ever since the BOC came out and decided that they would ultimately keep rates on hold because of fiscal stimulus. We discussed this quite extensively in our article. Oil collapse driven by panic is CAD at a policy turning point, and basically looking for the fact that even if Canadian dollar remains sensitive to oil, this change in policy outlook by the BOC and perhaps by fiscal authorities could prove to be supportive. So in an environment where the dollar is coming off, oil is stable, Canadian dollar looks like it's able to take advantage of it. And right now, seeing as how we're starting to treat some former levels of resistance, again, once more, right near 140 as resistance. Moving averages are becoming resistance in the short term. The pitch of the slope here is turning more and more negative. We really don't have a strong retest of the uptrend, if we really want to be frank about it, until we go all the way out, possibly all the way down to 132. And that would bring us back into a former consolidation region, which may make some more sense. So dollar CAD, don't be surprised if it pushes lower here. Canadian dollar could be a good target if we see the dollar index come off, more broadly speaking. Of course, pound dollar and Aussie dollar are a little bit of a mess. Aussie dollar is finding a lot of sideways and choppy price action around this former triangle support region. So keeping this in mind, I prefer to look at euro dollar, dollar yen, Aussie yen for risk sentiment around Yellen's testimony today, particularly be concerned about what's going on with gold, what's going on with that US dollar index, and of course with the Canadian dollar. As always, if you want to get in touch with me, feel free to reach out through the Daily FX Real-Time Newsfeed, Stock Twits, and Twitter at CVecchioFX. You can email me, cvecchio@dailyfx.com. You can join me every morning, 6 to 7 Eastern, 11 to 12 GMT in the Daily FX On Demand room. This week I'll be hosting a webinar on Friday for the Eurozone data in the morning. Feel free to join me there. Details will be posted tomorrow. Appreciate your time and attention. Remember, 10 Eastern, 1500 GMT, Yellen testimony, Humphrey Hawkins committee. Be sure to check in on the Daily FX Real-Time Newsfeed for live updates. If I don't speak to you the rest of today, good luck trading the next few days.